Good morning friends and welcome to the pre-market view. US markets were down marginally by about 0.2%. In fact, at one stage Dow was up about 120 points, but because of the latest developments on the Syria front, wherein President Obama has been able to gather the support from Republicans for a swift action against Syria, we saw sell-off in US markets. And before that, because of the joint missile test by Israel and US, we had seen most of the markets going down. European markets too were down about 0.5 to 0.75%, and 10-year bond yields in US have spiked up to about 2.86. Those some of the data points that came out from US in terms of non-ISM manufacturing index was slightly better than expectations. And when we look at the Asian markets today morning, Nikkei is down about 0.75%, Hang Seng is also down about 0.4%, and SGX is suggesting that we are going to have a slightly better start, and there is an uptick of about 22 to 23 points the last time I checked. Back home friends, we had a carnage in our markets, and both Nifty and Sensex were down about 3.5%. Nifty was down more than 200 points and Sensex was down about 650 points as we had the latest developments on the missile test by Israel and US, and that led to a panic wave of selling across the markets. The internals of the market were weak, the volumes were on a higher side, and the particularly affected ones were the index heavyweights and the banking stocks, which lost anywhere from about 5% to as high as about 10-12%. In terms of flows friends, FIs were net sellers in the cash market to the tune of about 700 crore. The domestic institutions were biased to the tune of about 500 crore, and in the index futures we have seen selling by the FIs to the tune of almost about 1800 crore. On that note, let me invite Sadhna to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning friends, let's have a view on derivatives. Due to macro and micro political and geopolitical factors, yesterday we have seen carnage across the street and Nifty fell around 4% in single trading session. But we have seen market participants have accumulated short positions in yesterday's trade as around 6.43 lakh shares were added in open interest and Nifty futures premium decreased from 3.85 points to 3.10 odd levels. And put call ratio also hovering around 1.20, but we have seen in yesterday's trade call option has added more number of shares than put option. Call option has added around 27 lakh shares in open interest, and whereas put option has added around 17 lakh shares in open interest, which is clearly visible in the options activity. In yesterday's fall, we have seen unwinding activity taking place from the strike of 5,500 to 5,200 put option. Simultaneously, we have seen almost good number of additions in call strike of 5,400 to 5,500. So this probably might act as a hurdle for the market. So every rise in the market can be taken as opportunity to go short. As we are trading below our weekly VWAP of 5,350, overall a bias for the market is negative, and our lower range for the market would be 5250 and higher range would be 5450. From intraday perspective, NHPC is looking weak. One can go short with a stop loss of 16.40. Thank you.
Here are the important news and events that we are tracking today. First of all, the government has cleared almost 17 FDI proposals, which includes FKABI, which has got the final approval for a total amount of about 349 crore. Also, the proposal of Jet Airways amounting to about 2058 crore has also been recommended for the consideration of the Cabinet Committee of Economic Affairs. The Reserve Bank of India has come out with tougher norms for the home loan schemes, and they have said that the disbursal has to be linked to the stage of completion of the property as against different innovative schemes being adopted by the builders. And because of these various schemes like 80-20 or 10-90 schemes are going to come to a halt, and also the disbursement will have to be in stages. So this could be definitely a bit of negative for both the developers as well as some of the housing finance companies, because the overall business in this segment is likely to be affected. TCS has bagged a multi-million-dollar euro deal from a Norway bank. The exact amount of the deal is not known, but this would definitely be a positive thing for TCS, so expect some positive move in the stock. And Dhanlaxmi Bank is exploring options to sell more shares to NRI as they are looking at garnering about 60 crore over the next couple of months. RBI has further tightened the gold import norms, and they have said that the gold which is sold to SEZ or EOUs would not be classified as export, and it will have to be exported independently for the purpose of 80-20 scheme, and 20% of the total import that anybody makes will have to be exported to qualify under this 80-20 scheme, which again is a bit of a negative for the gold importers overall. In another important development, the government has cleared the US-based Milan deal with Agila Specialities, which is a subsidiary of the Strides Arcolab. So after the FIPB approval, now the ministry has cleared it, so expect some positive action in the Strides Arcolab stock in today's market. And in another development, Coal India, where the government was earlier looking at doing a divestment, now because of the bad market conditions, the company might go for a buyback instead of the divestment. So there could be some uptick in Coal India stock because of this development. In company specific news, Wipro has won about 125 million or 850 crore multi-year contract from a German banking major Deutsche Bank. So one can go long on Wipro with a stop loss of 468 and a target of about 494 to 502. And REC, the company has sold shares of Vizag Transmission Limited to Power Grid for a total price of about 15.5 crore, not a big deal, but nevertheless one can go long on REC with a stop loss of 162 and a target of about 170 to about 174. That's it from all of us friends. Have a good trading session and see you tomorrow at the same time.